make your startup more attractive to investors, look into these venture capital schemes like EIS and SEIS. SEIS and EIS are probably the two most beneficial parts of the whole UK tax code. They were brought in initially to stimulate investment in UK startups, and they've just been extended for 10 years by the outgoing Conservative government. SEIS is the most beneficial of the two. However, it's only available in smaller numbers for earlier stage companies and smaller companies, hence they're generally speaking more risky investments. If an investor invests £100 under SEIS, they get a number of benefits. First and foremost, they get 50% of that investment straight off their tax bill on the bottom line. So that £100 investment has immediately only cost them £50. If that investment then goes really well and they eventually sell the shares that they've got in the startup for a capital gain, there is no capital gains tax payable on that capital gain. If the investment goes badly and the company, say, falls into liquidation and no value is derived from it, they can offset the remaining capital loss of £50 against their other income, which if their marginal rate of tax is 45%, that means that £100 investment has only ever cost them £27.50. EIS is slightly less generous, but still very generous, and available for much larger startups and later stage startups. All the same rules apply, except for the initial tax relief, which instead of being 50% off your tax bill, now reduces to 30%. So an EIS investment of £100 into a startup immediately only costs you £70, and then the capital gain on sale is tax-free, or the capital loss, if the company goes badly, can still be relieved against income. As a result of the scheme being so generous, there are a number of restrictions that apply to it and stumbling blocks that you must adhere to, or it can be a very expensive mistake. There are restrictions both for the investor and for the startup company themselves. For the investor, first of all, they can only invest £200,000 per tax year into an SEIS investment and get the relief from that. Secondly, they must have a tax bill to relieve. So if somebody invests £200,000 into a company and they want £100,000 off their tax bill, they need to have a £100,000 tax bill in order to reduce it. SEIS cannot generate a negative tax bill. For the startup themselves, they have restrictions applied to them. First of all, around how big they are, and second of all, for how long they've been trading. For SEIS to be relevant to a startup business, they must have been trading for less than 3 years. They must have net asset value of below £250,000 pre-money, and they can only raise a maximum of £250,000 from SEIS. EIS is available for slightly older and slightly larger startups. That can be claimed for companies that have been trading for up to 7 years, or in the exceptional case of knowledge-intensive companies, up to 10 years. They can raise up to £1 million from EIS.